Alrighty, we're getting close to the end of the course, which means you are very close to becoming a bookkeeper that's ready to start and has had a round of practice, has done a set of one full year worth of books, and now we're going to review our stuff. We're going to learn how to take care of that negative sales tax payable balance on the balance sheet, and we're going to go from there. Um, and we're going to wrap up this course with this chapter. The next video and the next chapter will be a little more of bonus material, where we're going to download Excel reports of the profit and loss and balance sheet, and we're going to, make some assumptions and see what we can really figure out and what type of metrics we can really draw. Okay. So for chapter six, we're going to be looking at our statements, really understanding the simple trends. I went over a little bit in the last chapter, but let's go again and let's do this from scratch so that we can look at these reports after we have fully categorized and reconciled books. So what I want to do here is I want to open another tab real quick just to have my balance sheet and profit and loss separately so I'm not having to run them constantly. Then I'm going to set my date range to 7/1/22 to 8/31/23 because that's the transactions that I've done so far. And in the next one, I'll kind of go into looking at it more in a reporting sense rather than looking at it more in the way that I'm looking at it. But for now, we're going to set up our balance sheet to run like this. We're going to hit run report, and we're going to go back here and we're going to do the same thing. 7/1/23, 7/1/22 to 8/31/23. So holistically, for let's say the date today is September 1st, 2023, this is what it would look like from opening to date. You would have a total income of 170,000. You'd have a total cost of goods sold of 46, which means your gross profit is 124, round up 125K. Um, you have your total lease expenses, and it's good to sometimes review these, check against your lease schedules, and make sure that this number makes sense, right? So if we really wanted to, we can go through, go to our lease schedule, and we can calculate, okay, we know 101,250 is the base rent, and we have our rent table here. We know we have a 1,250 security deposit, right? So we have one, two, three, four, five, six, seven, eight payments of 1,250. So that's 10K. Then we have one, two, three, four, five, six payments of 1,410 times six, which is 8,460. I'm writing these down on a sticky note on the side so that I can add them up again. And then that leads us to the payment we made on August 1st. So September 1st, we haven't paid yet, so we're going to leave it at that. So what we need to do is we need to add 10,000 to that number. And actually, the security deposit goes on the balance sheet, right? So let me take out that 1 month that I accidentally added in for the security deposit because I counted 10. So our number that we should see on the profit and loss spent in rent based on this rent table is 17,210. And that matches. So there's ways to, that's kind of how you quote unquote audit something is you can go back, check the schedule and make sure that that number is really close or is exactly the same. So we can see open to date after paying ourselves $65,000, the business's profit $30,000 after everything. And that's including $65,000 worth of owner payments, right? Taking a look at the balance sheet, we can see we have a healthy $20,000 in cash. All of our fixed assets are still here. We have this number that we still need to take care of. Our Chase loan, again, paid down like last time. What you'll notice is at the end of the last chapter to this chapter, the balance sheet doesn't really look any different. We're running the dates for the profit and loss and including July now, instead of in the last chapter, we were looking January 1st, 23 to August. But now we're looking at July 22 all the way through. So we're looking at all the dates of information that we have right now. So this will look slightly different because we're encompassing a lot of different things. But the balance sheet is always a snapshot as of a date. I know that there's a start and an end date, but that is for a different purpose in QuickBooks. Really, a balance sheet is only as of one date, which is your end date. So what we can do here as well is we can set this to 8/31/23 and have the same day, right? And if you run the report, you'll see that it is the exact same balance sheet. But if we set it like this, what we can do is we can compare it to a previous period. And right now it's previous year, sorry. And then we can hit run report and we can see this is the balance sheet as of the 2023 August 31st, and this is the balance sheet as of August 31st, 2022. 2 months right after we had opened, right? So our bank balance, the cash that we're sitting on, is significantly increased now that we have good cash flow, which is awesome. We've gained a sales tax liability. Again, we're going to take a look at that here soon. Don't freak out too much about it. And then we're going to see Chase loan is going down from when we first took out the loan to here. We can see that we took some distributions in this period of time that we're looking between 2022 August and 2023 August. And we can see that the net income at the moment of August 31st, 2022 is negative 8,000, but 2022 ended up falling under this amount and the rest of 23 was here. Okay, so let's take a look at the sales tax liability. What I'd like to do is I'd like to set the date range back to 22 to 8/31/22, 23, sorry. And the reason we're doing 8/31/23 and the reason why this date range exists is because when you click into, now let me take out this previous year thing. Because what this date range does, because if we were to do 8/31 to 8/31, if we clicked into one of these accounts, we would only be able to see transactions that were posted on August 31st, 2023, right? But when you have this date range, it gives you all of the transactions that add up to that, right? So these are all of the individual transactions that happen on a month-to-month basis for the sales tax that we're paying to the state, right? And so what we really need to think about is sales tax an expense, right? So the whole time we've been looking at the profit and loss, you don't see sales tax here. And this is because in almost every single situation, sales tax that you're collecting is something that you're passing on, right? So you would never want sales tax to come in as its own individual account because every single penny that you collect in sales tax legally belongs to the state. So you might collect it, but you're paying it out back to the state after when it's due, right? Which is typically within 20 days of the month ending, you have to pay out the sales tax. So what we need to do is we booked all of our square lines into here, right? So when you charge your credit card at a cafe, you're paying the whole thing, right? You're not paying sales tax separate, you're not paying for your coffee separate. It's coffee, sales tax, tips all in one. We're going to assume this cafe, and maybe I should have said this way, way earlier, but then we're going to assume this cafe doesn't have a tipping culture. So it's you only pay for your coffee plus tax. These deposits include your sales plus the sales tax that you're collecting. So, and again, this can be a CPA led thing if the CPA really needs, you don't feel comfortable doing this, you don't understand it. This is something valid that you can take to somebody above you or take to your CPA and ask for help. But what we need to do is for every one of these transactions we have here, we have to go and reduce our income by that amount. Okay. So what we're going to do is I want to open a new tab just to open a new tab so we can have everything kind of in the same. We can keep looking back and forth between these, right? So the first expense that we have is this. And let's go back to that in a second. So I just opened this up because I wanted to be in a familiar place. But what we're going to do is we're going to hit new and we're going to go to journal entry.